All right. Good afternoon, everyone. Good afternoon. So I'm Ross Aguilar, Deputy Head for Retail Research of First Metro Securities. So let's start. For those who have been active or always listening to our market wrap-up, welcome back. So we're done with 10 months of year 2022. We have 2 months left. But let's discuss what happened in the month of October. Okay, and then we have a special set of topics for you. What happened in October, what to watch out for in November. We'll talk about the telco sector and Tejas playbook highlights. For telco sector, this is actually a new sector report now, but we're not necessarily the most positive on this sector. But nevertheless, we'll try to explain to you our view on the said sector. But before that, let's discuss what happened in the month of October. Let's discuss. So in the month of October, the PSA ended higher by 7.2% to close at 6,153. So if you recall, last September, we were down. Diba? We were down by significantly, but in October, nakabawi. Nakabawi siya by more than 7%. But year to date, we're still down by 13.6%. Okay? So let's discuss a bit on what made the market go up. But before that, may days naman, kahit up naman yung market, significantly in October, there were days na down yung market. And it's mostly juggling between interest rates and yung oil prices. So what dragged the market in some days is yung decision by the OPEC to cut oil output. So meaning if yung prices or if yung supply mo is lower, higher yung maging price. So that spurred fears of inflation, tapos yung recession, right? That's what dragged the market in some days. But as mentioned, it was a huge rebound for the market because of couple of reasons. First is there were statements that the government said to defend the peso, di ba? May mga statements saying na we must find a way to defend the peso para hindi umabot ng 60, right? So that spread sentiment and okay, the government is on top of this. Another is there were statements that the BSP may have to respond to the US Federal Reserve point by point. What does that mean? For example, if the Fed raises rates by 0.75 basis points, meaning si BSP daw mag-raise yun ng 0.75 basis points. And that's what exactly the BSP said. Diba? Si Fed recently raised rates by 0.75 bips. Meaning si BSP will also raise by 0.75 bips. So that addresses yung interest rate differential and also yung pag-depreciate ng peso. Okay? So that has been taken into account by the market. One of the reasons why we rallied along with the global markets also because there were also signs na si Fed daw mag-slow down ng pag-increase ng rate hikes. Of course, if you read the news kanina, that was not the case. That was not the statement that Chairman Jerome Powell said. As a matter of fact, what he said was, it's too early to even talk about the pause of rate hikes. That's what resulted in the market of the US dropping by more than 1%. That's what also resulted in the Philippine market being down today. I would like to discuss a specific topic. Okay, specifically, why Hong Kong stocks dropped by the most since 2008? Because it's not even related already to what's happening in terms of interest rate hikes, inflation. In the latter part of October, we saw the Hong Kong stocks had their worst day since 2008 global financial crisis because it was after Chinese leader Xi Jinping secured this, I think this was his third term, right? So there were fears na yung existing policies niya will continue, right? Like yung more focus on cracking down on the inequalities, on income inequalities. Diba? So syempre, yung mga listed sa stock market, yun yung mga bigger companies, matatakot sila na mag-crack down sila, right? Also, yung COVID zero policy na has been affecting the bigger companies also in Hong Kong, right? So as a matter of fact, in one day, the Hang Seng Index went down by as much as 6.4%. That's the biggest daily drop since November 2008. As mentioned, yung global financial crisis. And The index closed at its lowest level since April 2009. So parang that's kind of a lost decade, di ba? More than a decade. So in that same day na the Hong Kong market dropped by more than 6%. In GDP data pa was actually positive, higher than expected, right? But because of the new term of Xi Jinping, okay, matutuloy na naman yung zero COVID policy, so that could result in volatility sa stock market kasi yung focus is addressing the health issue, right? And then there's also, again, yung fear na magka-crackdown on select big tech names sa Hong Kong, di ba? The likes of Alibaba, Tencent, right? So that's yung fear ng market. And then there's also fear na, okay, Xi Jinping has done well probably in his first couple of terms, but right now, the outlook is not as rosy. Right? Kasi nga, may tinatawag na common prosperity, which should not be good for bigger names kasi that addresses yung income inequalities. So that's something to watch out for, at least for Hong Kong stocks moving forward. And that could affect other Asian names kasi as we mentioned before, since we're part of one basket, diba? If may cracks in other Asian names, that could indirectly affect the whole sentiment for Asian equities. That's why we're discussing this also. Para at least may tayong background, okay, kaya pala down yung Hong Kong stocks. Bakit nag-underperform yung Hong Kong stocks as compared to the other names, right? So there. And of course, geopolitics-wise, there are also statements that China could invade Taiwan before 2024. Of course, this is according to the head of the US Navy. Okay. So something to watch out for definitely, right? We've seen China, Hong Kong years ago. We've seen Ukraine, Russia, right? It has been nearly 1 year already, Ukraine, Russia. It's still little to no progress there. Of course, US is ready to step in. We have also seen recently the issue regarding Iran and Saudi Arabia, right? So US ready to step in. So additional risk clouding market sentiment. Okay, so going back to the market, technical analysis. Yes, the market rebounded from that's around 5.7 was high as nearly 6.2. But if you take a look at the chart closely, and for those listening to podcast, if you take a look at the chart, if you add simple moving average of 50-day and 100-day, it's not as it's now acting as a resistance. And if you take a look at August, those 50-day and 100-day moving average after the support, now it's acting as a resistance. So, and if you take a look at the market since mid-2021, it's still on a downtrend, right? So if you ask us, the market should break above at least 6.4 better, yet above 6.8 for a clear reversal. Okay, so there. So what to watch out for in the month of November? Still, the movement of the US dollar and Philippine peso, but especially recently. Okay, good na hindi nagsi-60 yung peso, but it's still in mid-58. We're still near the highs, right? And if you take a look at price action, this could just easily be a pullback in preparation for the next set of rally. Especially yung Fed right now nasa hawkish mood pa rin, hawkish mood. All the more, we should watch out for the language of the central banks across world inflation, especially for the Philippines. Inflation will come out tomorrow, November 4th, and the expectation is mid 7%. How will that affect monetary policy in the coming months? Okay, will they do more than what the Fed is doing in terms of interest rate hikes? Something to watch out for. Also, corporate earnings na in the next couple of weeks, including this week. For the first 2 weeks of November, that's where the bulk of the earnings will come out. Two things to check out. Number one, did earnings come out better than expected? Number two, what's their guidance moving forward? That will directly impact the share prices moving forward, definitely. As mentioned, cracks in the global financial system, I showed to you like a couple of slides ago what's happening in Hong Kong. Europe, a lot of countries there are technically in recession already. Iran, Saudi Arabia, dami. Geopolitics, in line with what we mentioned earlier. And we mentioned this last month, oil prices, will it increase during winter months? Especially there's a need for heat, fuel during these types of season. In terms of economic data, as mentioned, inflation tomorrow, November 4th, and then unemployment rate November 7th, over remittances November 16th, central bank interest rate decision, BSP, November 17th. For the US jobs report tomorrow, inflation November 10th, GDP November 30th. And then we have select GDP data from the EU, inflation data from EU and Japan. Data driven, and a lot of central banks are definitely data driven. That will direct their monetary policy moving forward. And for topics, you mentioned several times in terms of which are topics. We explain to you how we are prioritizing in recommending the likes of property names more on SM Prime because of its high mall exposure, right? And then for the banks, all of those, especially the bigger ones, we recommend those given how the economy is reopening. For holding names, we prioritize the likes of SM, given how it's leading in the banking, real estate, retail. So these are our topics. Here's the upside as of end of October. Okay, so there's no change in target price since I last discussed the monthly wrap up. Okay, I would like to discuss after this slide. I would like to discuss more on the telco sector. But on this slide, we would like to emphasize the outperformance of our stock picks. If you had bought our stock picks, you would have significantly outperformed the market. Mainly because if you take a look at the return, diba, you can really see SM Prime is up this year and banks are doing relatively well as compared to the market. That's what caused the outperformance. So now let's discuss the telco sector. Okay, in terms of the retail, in terms of the full-blown report of this, we will share them to you early next week. Okay, but I would like to share to you as early as now in terms of what our view is on the telco sector. So we are actually underweight on the Philippine telco sector for the following reasons. Underweight meaning, diba, usually when you hear recommendations, overweight, neutral, underweight. Overweight is the positive one, underweight is the relatively negative one. And we'd like to discuss why we're not so positive on the telco sector or we're relatively underweight. Number one, we expect the competitive environment to intensify in the next 1 to 2 years in the mobile and fixed line segments. Okay, so we're seeing unfavorable impact of recent regulatory events to incumbents, aka PLDT Globe. Of course, there's this entry of third player Dito Telecom. If you take a look at it individually, Dito Telecom posting huge losses, it may seem like they're not a competitive firm. It may seem like, okay, yung owner, huge debt, selling a lot of its companies, it may seem like Dito Tel will die. Not necessarily, because if you take a look at the number of subscribers, it has grown significantly in just this year alone. So it's eating a bit of the market share of PLDT and Globe. And that resulted in these names, the incumbents, PLDT and Globe, investing a lot to keep their market share intact. They're allocating huge budget to really keep up with the times, to really keep up with their infrastructure. Of course, some of those infrastructure they actually import, and that might have resulted in higher than expected spending because of the impact of the peso, right? Kasi pag nag-import ka, spending mo likely dollar, right? Yung dollar nag-appreciate, so mas napataas pa yung expense, right? So all of those just to stave off competition. And I would like to discuss which regulatory recent events we are actually supported our view that the mobile segment is highly competitive. Number one, mobile number portability. Good for us. It lowers our switching costs. Kasi, for example, if right now, if I'm Globe, I can switch to Smart without changing my number. That's good for us. It lowers our switching costs. But for the companies, not so good for them. Tower sharing, headline-wise, yes, it's positive for them because it helps them be more flexible to their balance sheet, right? It helps them to monetize their tower assets. But in the long term, it opens the towers to competitors. It even evens out the playing field, diba? So for example, there are a lot of private companies now into tower assets, listed ones, avoid this, right? Amendments to the Public Service Act. Foreign firms can enter here. and eat up their market share. A big enough company just to na makakita ng opportunity can eat up the market share of PLDT Globe. And then the SIM card registration, like in the long run, it may result in consolidation of market shares. Especially right now, it's hard to say na may brand loyalty in terms of Globe or Smart ka. A lot of madami na nga subscribers din dito Telecom, madami na nag-switch kasi probably mas mura. And if that one company, wherever that company can dominate in the near future, we will likely switch to them. Especially switching cost now is significantly lower given the mobile number portability, right? So these are the recent regulatory events that made us underweight on the mobile segment. Hence, telco sector we're not so positive on. But we have preferences. Okay, it's just that, okay, we prefer property, specifically mall names. We prefer consumer discretionary. We prefer banks. But to answer your question, sa telco sector ba, sino mas prefer? Sino yung pinaka-prefer na? It's PLDT. As mentioned, we're not so positive on the mobile segment. But for PLDT, it has a robust fixed broadband business where it has 48% market share. It's less reliant on mobile service revenues. It has other revenue streams such as corporate data center. Hence, we like PLDT. We lowered the target price though to take all of those into account. For PLDT from 2,150 to 1,930. Okay, so top pick sa telco sector, PLDT. Converge, the next one. For Converge, our previous target price is 41. Huge downgrade in target price. But as of current levels, it's a buy for us with a target price of 15.50. As mentioned, we're not so positive on the mobile segment. Converge has no exposure to the mobile segment. Mostly sa fiber broadband siya. But part of the reason why it's underperforming is you can really see how other companies are eating the market share of Converge of fiber broadband, like Tel. But we cannot deny that there's huge upside sa fiber broadband segment and Converge can definitely benefit from that. Taking all of that into account, putting a number on what Converge value should be, may upside, 15.50 for us. For Globe, we recognize the GCash upside in the long term, definitely. But at current levels, it seems like most of those have been priced in already. And we would like to focus na yung mobile service revenue historically accounts for 70 to 75% of Globe's revenues. And as we've mentioned, we're not so positive on the mobile segment right now because of competition and the recent regulatory events, hence bringing the competition. Okay? So that's for the telco sector. For the previous playbook highlights, we would like to emphasize that yung hit ratio is still 60%. If we take a look at how it's performing, it's still way better than the market. So we recommend you take a look at our playbook reports that we send through Viber, given that we're still, facing issues sa research reports namin. We will definitely get back to you on that. Hopefully we can fix it as soon as possible. Siguro na lang if we have our colleagues here from the marketing department that can send the link to the Viber group. Of course, this is only for clients. If you let us know, kindly email us. If you're a client, kindly email us. We will check if you can join our Viber, which includes clients, so you can access all of our reports or insights on the dot. Going back to the presentation, we also mentioned Telco. So this is Semerari. Before siya nag-drop, we mentioned you can take profit already. Pwede ka magbenta like on the X date itself. Even if you sell on the X date itself, you probably save yourself at least 10% drop. Because it dropped to us to 33 by then. So there. Yeah. So yeah. All right. So let's try to answer your questions. As for Semerara, what's our outlook for Semerara? Definitely for 2023. Well, even the company itself, they're less optimistic already. Even starting second half of the year, right? For second half of the year, partly because of inclement weather. Right? The weather's not so positive for them kasi rainy season na. But for 2023, they recognize that they have been fortunate in terms of how coal prices have performed, right? And that could normalize in 2023. So yes, they gave out huge dividends. They could give out special dividends pa rin in 2023. It will likely be less than what they gave this year. Okay, in terms of yield, in terms of the actual dividend per share. And in terms of the volume, in terms of average selling price, that will likely normalize next year. Okay, so a lot of the money has been made already for Semirara this year. Not saying may wala nang upside sa Semirara. There is upside, but for us, assuming no other Black Swan events, we expect the opening names to outperform already, outperforming commodities. So that's what we think for 2023. So for Converge, why is Converge going down these past few months? Several reasons. Number one is yung lower than expected earnings because of showing signs of peaking in terms of residential subscription additions. So they're not nag-show na ng peak yung in terms of yung new subscription additions nila. So of course that's actually a fundamental issue right now for Converge. But in line with what we showed to you in the slides, at current levels, may upside na sa Converge in our view, right? But just to answer your questions, it's a fundamental issue for Converge. It's going down the past few months because of showing signs of peaks for residential subscription additions. Also, it will likely be downgraded sa MSCI rebalancing on November 11th, right? I would like to mention that also there's MSCI rebalancing, and Converge right now is part of the standard cap for MSCI, and it could be downgraded to the small cap, which could force a lot of investors to sell also Converge. And some have already anticipated that in the past few weeks. So that might have also resulted in Converge going down the past few weeks and months. So there. Next question. Will the property sector drop further with this interest hiking environment? They have mostly priced in already what has been said, right? Keep in mind that the stock market forward looking yan, right? Most have been priced in already. But if we see, for example, for BSP, expectation na by sa November 17, BSP will hike rates by at least 0.75 bips. That has already been priced in by the market, if you ask me. But what has not been priced in is what will the interest rate movement be moving forward? Will it be more than aggressive than what is already expected, or less aggressive? If it's more aggressive, definitely the property sector can drop further. If it's less aggressive, may upside yung property sector, right? If you take a look at Ayala Land, where bulk of its revenues come from the residential, siya yung natatamaan right now because of high interest rates. Okay? So right now, the answer to your question is it can drop further, but most of the bad news in terms of the effect of interest rates to the property names has already been priced in, if you ask me. So there. Okay. Yeah, as you mentioned, okay, it's a good question. So why did Semirara drop so much despite favorable earnings reports? Two reasons. Number one, if you recall, last October 26th, there was a dividend X date for Semirara. So that resulted in the stock dropping by as much as its dividend yield that it provided, more than 10%. Number two, coal prices have pulled back also. So keep in mind the stock market is forward-looking. The market has already, nung umakyat si Semirara to 40 pesos, it was already expected that they will post record high earnings result. So what Semirara is pricing in right now, besides the dividend exit, is the pullback in coal prices. Keep in mind, coal prices have been so high. So a pullback is warranted. It makes sense. Okay. A question here is, are there stocks possible for addition, deletion in the next MSA rebalancing this November? Good question. So, of course, we're still in the process of trying to figure out who exactly, but on the top of our head, it could be Converge, MPI. So those two names can be deleted sa MSA rebalancing this November. And then that's for the standard cap. They could be removed from the standard cap, downgraded to the small cap. Okay, so Converge or MPI. And then for the small caps, which can be totally removed from the MSCI, one is All Home. So those names can have active price action by mid-November. So something to watch out for. Good question. Given that remittances is usually up during December, will consumer retail benefit from this? Yes. So, di ba usually pag Christmas, yung mga pag Christmas season naman nagbe-benefit yung mga consuming names, especially pagandaan. Yeah, you mentioned correctly, Pure Gold, RHI, right? Mart all day. Yeah, those names can outperform. But looking at them at a stock basis, we have to take into consideration also the likes of, for example, si Mary Mart, which has shown earnings signs of peaking, same as Aldi. For Pure Gold naman, yes, may upside siya. But right now, we prefer the likes of RHI because not only the supermarket business, but the economic reopening is benefiting the other segments, the likes of the department stores and the like. So, yeah. Next question, when is the right time to be aggressive in equities? When there's clear signs na yung interest rates pababa na, right? So, if interest rates pababa na, definitely that's the best time to be aggressive in equities. Okay? So, yeah. Good question. Do you foresee the peso going down beyond 60 within the year, even though the BSP says it will go tit for tat with the Fed Reserve? It's possible. It's possible, especially if, kasi you can only increase the rate so much that it can affect the economy significantly, right? In terms of the economy of the Philippines and the US, it's quite different. I'm not even talking about growth itself. I'm talking about the sensitivity of yung increase of rates to US and to Philippines. Where, of course, since we're a developing country, it can affect us more, right? So, meaning mas may room yung Fed to increase rates, and if they have more room, of course, we can only tit for tat as far as, diba, so far. But if Fed decides to raise rates pa further, tapos si BSP can't match it na, then the peso can go beyond 60. So, yun. Next question is BSP 75 bips expectation November already priced in. We think it's already priced in. As a matter of fact, na, if BSP goes a bit more aggressive than the Fed, that can be a bit positive for the peso, hence positive for the stock market. But at least 75 bips. But the 75 bips itself, yes, we think that's already been priced in. In terms of our projected 2022 NPSI level, we mentioned, I think, a couple of months or 3 months ago that our bear case is 6,600, and that's still our bear case right now. Of course, in the coming weeks or probably mid-December, we already have our 2023 PSA forecast. So we would love to share that with you once we do have. But just to emphasize, the bear case of our bear case PSA level 2022 year end is 6,600. So that could definitely, of course, definitely pwede siya kapusin or not. But the point here is which stocks really you prefer. And we mentioned naman before, right now, still the strategy is to not be aggressive. But of course, 0% exposure in equities is not a good idea, especially if you're not that active, because you could miss out on the possible rebound. Diba? Just like what happened in COVID, like 4,000, pero like wala pang 1 week siya, nag 4,000, nag 5,000 na agad. So you could miss that gain. So it's best to have a bit of exposure, but you have to be picky. So property with high mall exposure, the likes of SM Prime, pwede ka mag-banks, the bigger banks, the better. Tapos select consumer discretionary, RHI, Jollibee. Next question, why are REITs going down beyond their IPO price? It's because of higher interest rates and makes fixed income, makes bonds, makes investing in the fixed income more attractive. So they're shifting from REITs to fixed income. If you asked us, the bigger the REITs, the better right now. So A-REIT, M-REIT, RCR, good bets for the long term. Of course, we're not telling you na akit yung si A-REIT, M-REIT, RCR in the coming weeks. Definitely not yet. But if you're looking at this at the long term, now may be a good time to enter or average. Next question. It's a good question. For the 20% index public float requirement for the PSEI Blue Chip Index by end of December 22, correct. Which of these names have not yet complied to the 20%? There are 2 names, I believe, is San Miguel and Emperador. So based on what the PSE disclose, yes, if they don't meet those requirements by December, they can be immediately removed. So, diba? So that's good. That's a good observation. So watch out for those names. SM, San Miguel Corp, Emperador. Will there be a Santa Claus Rallies 2022? Well, that depends again on the interest rates. What we have to hear is interest rate pace will decelerate, will be gradual. Diba? Yun yung gusto natin marinig. Will slow down. That's what we want to hear. Because concept-wise, if interest rate mo malapit na or pababa, that's the time equities will outperform. So that's where most of the money have been made noong 2009 and then the previous crisis, diba? After crisis effect. In layman's term, what do you mean when you say priced in? Priced in meaning the market has already taken into account what will happen or what will likely happen in the future. That's what priced in means. Meaning, for example, si Semerara, the market has already expected na yung earnings niya will be good. Hence, the share price already reflects the expectation, right? Because we have to take it to take into account that the stock market forward looking, it's ahead of the actual news, right? So that's what priced in means. All right. So one last question, and this is a general question. In your opinion, after some countries have reinstated their coal power plants due to high cost of other fuels like natural gas, do you think demand for coal will still be elevated for at least up to next year? That's a good question. And yeah, we think that there will still be demand for coal, definitely. But in line with my answer kanina, I'm just saying it will not be as good as this year in terms of 2023 coal demand. Because in 2020, there was a shock na, kailangan pa pala yung coal. Especially, kailangan take into account yung demand for the basic energy requirements. Right? And we need coal for now to survive. So there was this shock in 2022. For 2023, naka-adjust na yan. So what I'm saying, yes, coal demand will still be coal will still be in demand for 2023, but it will normalize a bit as compared to 2022. That's what I'm saying. So there. So thank you. This has been Roy Aguilar, Deputy Head for Retail Research. And as always in First Metro Securities, it's hashtag your future first. Thank you, everyone.